What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is August 28th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to try to answer a vital question that is on the minds of a lot of people in crypto, and that is whether or not we even have the possibility to have a altcoin season or an altcoin cycle or altcoin super cycle. You know, the kind of things that we've covered for the last couple of years here on the channel. And whereas back then there were clear setups, clear narratives, and it felt like momentum was on our side, a surefire bet, now things are feeling a little bit different. And I want to try to dive into the data to try to explain why it might feel this way, and why some of you out there who may be hoping for an altcoin cycle may also feel that sense of skepticism. Or if you're not, perhaps an additional opinion may help you on your journey and help protect and preserve your capital. We got a lot to unpack here in today's video. If you happen to enjoy it, consider dropping a like, and let's go ahead and kick off the rambling. Now, I want to go ahead and just zoom out here on the long-term chart. And what I'm looking at here is a metric called Others. If you watch the channel frequently, you'll probably hear me reference Others as a metric within TradingView. And this is a market cap measurement of all the cryptocurrencies, excluding the top 10, from Bitcoin through Solana, as well as some of the larger plays. And the reason why I really like to look at this chart is because this is where a lot of the life-changing returns are going to be made. You're not going to be getting any 10x's on Ethereum. You're not going to be getting any 10x's on Solana from here on out. So it's imperative to understand that the life-changing returns are really made within this metric. And if this general index, this measurement of market cap and valuation, is not moving higher or showcasing the signs of optimism, then we need to be a bit concerned here when we're trying to answer whether or not there's going to be an altcoin cycle. So I take a look at this chart here to start, because while we've got a lot of really interesting metrics, I'm going to be diving into some on-chain analytics, we're going to be diving into dollar liquidity measurements, a whole range of stuff. And again, you can use the timestamps down below if you want to. I'm generally going to be trying to run through this relatively quickly, so I hope you guys can stick with me here. The big thing I want to emphasize is that over the long run, altcoins have been in an upward channel since back in 2018, when we established a relative high and a relative low. This range helped set the framework for the 2021 high range, and also as well the 2023 lows. You can see perfectly here how essentially the alignment of these prior lows back in 2018 and 2020 helped to establish the foundation for altcoins, both here in August of 2024 and here in June. So far, a lot of people would probably look at this and go, hey, this looks pretty good. You know, we're maintaining the support range. That's definitely what matters most. And I absolutely agree. Maintaining that support range, so long as that holds, at least sets a framework for where you can expect altcoins to be over a given time frame at the bare minimum, if not ideally higher. The question is whether or not it can continue to hold that. And what really concerns me here is twofold. One, the upper band of this channel, if we're to kind of remain consistent and expect that at some point it's going to go up here, is much higher from where we're at. In fact, it's more than a 10x multiple. So we have to ask fundamentally if there's even a chance here that we could get that 10x rep. And I know a lot of us want that. I know there's a dozen content creators who will tell you that that is going to happen, many of which probably have come over the last couple years and are waiting for their first bull market. But I want to echo again just how imperative it is to understand how difficult it is for altcoins to be able to make a move like that. The amount of dollar liquidity, all the kind of setup that we need, new users and new participants, new narratives that are going to be required to really drive us towards there. And beyond the fact I could tell you in my opinion that I don't see that happening, we need to observe the most important thing. It's not what I think, it's not what every other market participant thinks, it's about what price says. What is price telling us? Like, unfiltered, what are we seeing here? Well, while we're able to maintain on this support line here, as we've had this rebound, we are facing resistance yet again at the 100-day moving average. That purple pocket of lines here on the chart, those moving averages, those are serving as resistance. The 200-day is also, the blue lines here are serving as resistance, whereas they were serving as support in the past. That is not a good sign to see. It showcases that over the last 100, 200 days, we are lower, and the trend is not confident. The 21-day, for example, if we zoom in on a kind of shorter term time frame, is not able to provide support. We cleared through it yesterday. And now we're coming to a more fundamental moving average kind of competition or war here, which is the battle of the long-term moving averages like the 100 and 200-day as resistance, and our hopeful friend, the 200-week, that might be able to come in and start acting as support, whereas it was resistance in the past. So far, that's been playing out. But the question is, over the next few weeks, is that going to play out? So again, I have to tell you guys, the price action right now, well, again, everyone's going to have their own opinion on it. We didn't clear through the prior highs. That's really a bad look. The fact that we are spending a lot more time at the 200 week now and not getting a huge spring up of momentum off of that is not a good sign. So it showcases that entering into altcoins right now could be very risky. And we've seen back here in 2020, I understand a lot of people say this was the pandemic. Markets were much smaller back then. But again, understand here that something like this could very well happen, and it will throw off a lot of people. You've got the 100 month, which is now becoming a much more, as crypto markets have years of price action now and are not multiplying like they used to, is becoming a much more common moving average. We can see ETH to BTC, for example, now down below the 100 month EMA, which it just would have been unthinkable back a couple years ago with the outlook people had on crypto years back. Right? To see a 54% correction in the ETH to BTC ratio and not see people coming in to swing up and buy it, considering especially we didn't break the prior highs in December of 2021 against the prior highs in 2017. So anyways, we've driven in a little bit of that chart, but I want to dive into the really juicy stuff here, guys. I want to dive into the on-chain analytics, because while I'm not so big about fundamentals measurement here, at the end of the day, we care most about price action. Fundamentals do matter in the sense that there have got to be some metrics, some signals that new participants are coming to the market. Because if we don't have those new participants, if we don't have the new liquidity, if we don't have, essentially, if you want to view it in a very kind of cruel, honest way, the greater fool theory, that people are coming and willing to pay a higher price to drive up rallies, then essentially we are not going to have a substantial bull market. I'll give a great example here. A lot of people really juiced up about Solana this cycle. It's back towards its November 2021 highs in terms of market cap, its price, a little bit lower than that because there's new inflation, new supply. But again, at the end of the day, huge, accomplishment to get back up to these highs, right? I would have said back here again, giving you completely honest campaign, I wouldn't have been bullish back in the day on Solana, right? Solana's made a really big comeback. It upset a lot of people, and it came back to being one of the largest protocols in the crypto space. The next question here is whether or not this can continue. Well, we've not only been ranging sideways since back in March, right? So we're now coming in here into the month of September very soon. So it's been multiple months, nearly 6 months here, that we have been charting sideways. Well, why might that be? Well, I think the reason here, if we just take a look at the metrics, is that if we take a look at one of the most honest on-chain metrics you can think of, I'm not talking about transactions on-chain, on Solana you can spam transactions, it doesn't cost anything, right? I'm not talking about the total value locked of Solana tokens in DeFi protocols, no. I want the most honest, costly metric to actually showcase itself, and that is stablecoin market cap or stablecoin liquidity, right? And basically, this is a very simple measurement. This could still be manipulated to some extent to the benefit of any protocol by just having large VCs or large holders of dollars just depositing them on the protocol, right? But at the end of the day, I want to see a massive expansion in stablecoin liquidity. In fact, I want to see it breaking new all-time highs, especially if we're talking about market capitalization of that protocol going to new all-time highs. I want to see fundamental adoption. Now, Solana is one of the best looking players in this sense. It has not reached its 2021 highs back in 2022. I think the metric was probably even higher back in 2021. But it was sitting around $6 billion from the data that we have here back in the middle part of 2022. Of course, unwinded significantly after the FTX collapse, as it was a very closely tied project, Alameda and FTX. But we see here generally a good acceleration here off of those lows. It's definitely in an uptrend, higher lows, higher highs, but nowhere near those prior highs, right? So again, the important thing to understand here is that the narrative right now is that Solana is making this big comeback. But if you really take a look from an overhead view, you can see that we haven't even gotten back up to where we were in 2022, which, mind you, was bear market territory. Might have been even higher back then. Again, we just don't have the data to work with. But beyond that as well, we're not only not at those highs, but you have to understand that a lot of this is coming in for one particular reason. That's meme coins, baseless speculation, nothing substantial, nothing in which people have this full faith trust in. It's a market where you get in when momentum is there and you get out when that momentum slows. There's no exciting narratives or technology here, right? So, and again, I understand some people say, oh, Nick, it doesn't matter. It's all about speculation. what you need to understand is that while you might realize that at the end of the day, and I say this just as a friend, guys, I don't mean to speak with too much confidence or anything, but I do say this with a high degree of confidence because at the end of the day, you may believe at the end of the day the truth, which is that markets don't always have to be fundamental. People pay a speculative premium. But the problem with it is that if you don't have people who are willing to believe in that message and are too eager to take profits and they don't expect the same kind of multiples as before, and traders and investors are getting smarter and smarter, they're seeing the repeated scams in the space and the empty promises, they're much more willing to take profits. And that's a big reason why Solana, being at the same market cap highs back in the past, you're already starting to see signs of clear distribution. You're seeing that we are just hanging by a thread on that 200-day moving average. I mean, take a look back here at the last cycle, right? Much more accelerated moves here, much more multiple potential, right? And again, at the end of the day, if we see these kind of big flags here, of course we have periods of consolidation. The question is that going to play out here? And the simple way I would say to trade Solana, if you want to be very careful about this, is if essentially you get above those prior highs, you get a breakout, then just ride it from there. Don't try to risk it at the 200-day, because I know a lot of people are thinking it's going to play it exactly like the past. It's going to play it the exact same way. I don't know about that. We're going to have to see. Take a look here. There's worse defenders here in the market. BNB, which is the native token of the Binance Exchange and Binance Smart Chain, one of the large, kind of layer 2 or EVM compatible networks. You can see here, for example, again, similar signs here, sideways distribution since back in March, with lower lows each and every time, and much more dramatic lows each time. So these are, again, signs of distribution here, signs of stagnation. But maybe the on-chain analytics can save us. Maybe it can give us hope beyond the fact that, in this case, BNB broke a 7-year-long trend line, right? 6-7 years here, give or take. Major trend disruption. Well, let's go ahead and take a look at Binance Smart Chain here, right? Stablecoin liquidity is just absolutely flat. It's been sitting at 5 billion for nearly a year now, after a significant decline from around 13 billion at its peak. That reveals to me what I felt in the market, what I think most people have felt. There is no new users coming into the Binance Smart Chain ecosystem, or at least there is not more new users in liquidity coming in versus those who are leaving. That's the important part. We need a net surplus or growth of people coming into crypto. And that's not me just being negative. I know some people will say, oh, you're focusing on one piece of data, but this is one of the most vital pieces of data. It doesn't matter if you're talking about DeFi. It doesn't matter if you're talking about real world assets. It doesn't even matter even if you're talking about DePIN, NFTs, anything in the space. You are going to need dollar liquidity at the end of the day to make these systems function. And we can see very clearly the difference in the acceleration back in the past and holding at those highs versus being down in the dumps here. So this is a big reason why, again, I'd be very skeptical on BNB, because you've not only broken the long-term support line where lows were formulated, right, where significant buy-the-dip opportunities happened, but you had a clear breakdown and an attempt to try to get back up there. But unfortunately, we are at the same highs where we had much more stablecoin liquidity, much more user activity on the Binance Smart Chain. So a lot of the froth or additional value that was added to BNB mostly came from Binance Smart Chain and the hope that this was going to be a major network in the crypto space. If that starts to essentially falter here, if we can't see some changes, this could easily come back down at a minimum here to this $33 billion range. We were just here back in October 2023. We were here during the corrective periods in 2021 and also here in 2022. It can easily happen. It's happened multiple times. And if we don't have new buyers coming in, the sell side pressure can pick up very quick. I'll give Cardano as another example. I'm not here again to bash your holdings or bash your chain. I'm just here to let you guys know about the facts, hear a different opinion. I promise you, even if you don't want to hear it, if you can listen to me here and just consider, take it with a grain of salt, I think it'll help you with your analysis. I'm only here not to just show projects. I'm here to let you guys know about essentially what the market is signaling and where the market is likely going off of those signals. Take a look at Cardano. Now, this is a very tribal group of people in the crypto space. I know some people love Charles Hoskinson, some people love Cardano. I interviewed Charles back in 2017, back at 2 bull markets ago. So don't take me as being someone who just wants to bash Cardano. I was a big believer in its vision in the early days. But man, we have had 7 years, almost coming up on 7 years here that Cardano has been trading. And guys, not only is the market cap way up here from the lows of the last bear market in 2018, sitting around a couple $100 million to $1 billion on the lows, sitting at 12.5 billion. But take a look here at TVL and stablecoins. There was, at its peak back in December of 2023, right, as DeFi started to come online, some of the vision was finally starting to deliver. People could start to do complex transaction types and swaps. Went up to $23 million, and now it's sitting at 13 million. Now, there is no real way, for example, in the terms of like traditional equity markets, you have some clear measurements on PE ratios. These are price to earnings multiples, the price someone is willing to pay for a share versus the earnings per share. Essentially, the income a business is making versus its valuation, right? There are clear, definitive ways to do that in traditional markets. In the case of crypto, we don't have those measurements, but this is one of the greatest offenders here. If you were to measure by a market cap, whether you're using the circulating or fully diluted versus dollar liquidity, there is only $13 million in real money on the Cardano network in dollar terms, right? And it's a 12.5, $16 billion network. I mean, wow. Like that's not even me like trying to insult it. That's just data. That's just real stuff here. And you gotta ask, if network activity has been declining for the last 7-8 months and all that we could get to is $23 million, how does it justify Cardano being at a $12.5 billion valuation? It is only because I think this is the fact of the matter with lots of altcoins out there who have yet to really reach any serious sense of adoption and widespread value creation. And that is that there's a slow distribution game with a lot of people thinking, oh, I'm buying on the lower range here, just like back here in 2019 and 2020. It's going to explode one day. And they're just slowly selling in to gullible buyers here at the end of the day. And that's not just Cardano. It's not just the ADA token. It's a lot of these protocols. Give another one here, Avalanche, right? Big player back in 2021. A lot of people started to get excited about it again because GameFi was the big narrative and Avalanche was going to be the big chain for that. I constantly had people coming to me saying, Nick, but are you following like all these major projects out there in the GameFi space? And yeah, of course I was watching them. I was watching Avalanche make a comeback. The question for me though is I'm wondering, because the real gains in a bull market are made when you get past prior highs, when you make those explosive runs, right? When you get a real altcoin cycle, as we've been talking about here. And take a look here at Avalanche, barely hanging by a thread against its 200-week here, right? Down from around $24 billion back in March of 2024, down to the relative lows at $7 billion, and we are barely trying to attempt. We get these nice bump ups, couple double-digit percentage moves within a week, and what do you see after? You get a smackdown, a near engulfing candle that's just met with more sell-side pressure. Are we seeing the exact same thing here? We're not even through the week. It's Wednesday from the time of recording, right? So my point here is that this is definitely not a good sign to see. But then again, let's take a look at the fundamentals here. Avalanche, stablecoin liquidity. It's been flat since back here in May of 2024. But beyond that, the uptrend that we got from $1 billion to $2 billion in stablecoin liquidity dwarfs in comparison to the $4.6 billion that we had back in March of 2022. Even back during just the highs of the market, $3 billion. And the important thing to understand here, guys, and this is why I emphasize the importance of dollar liquidity, that's the next topic we're going to be talking about, is that for valuations to keep extending higher and higher, for you to still be able to maintain some degrees of multiples on these plays after they're already billions, if not tens or hundreds of billions of dollars like Ethereum, you need more and more liquidity per essential acceleration in price, right? It's the fact of the matter here. And while I know a lot of people would, kind of point and say, oh, but look, Nick, stablecoin liquidity here is higher than where it was back in April 2022, right? Therefore, it must mean that valuations can go to the same price range they were at then, or they can go to new all-time highs. Not to mention they're much higher than where they were back in November, right? About $40 billion more. All you need to answer that question is why then are we not able to go to new all-time highs? why are we not trending? In fact, not just at the previous all-time highs. Why aren't we really accelerating to new highs? And the reason is because that dollar liquidity expansion alone not only needs to accelerate faster and faster. So this is the regular chart. If you put a logarithmic scale, it makes a lot of sense. There wasn't much acceleration like we had back here in dollar liquidity this cycle. But beyond that as well, those dollars just sitting there are not going to be as bullish and optimistic as they used to be. People, again, at the end of the day, who hold positions and have access to dollar liquidity by selling via AMMs, exchanges, etc., they're probably much more eager to take profits. And when you have weaker dollar inflows, and you have, generally speaking, probably a big part of this is actually people, the reason it's not accelerating so fast is there are not as many believers and new participants like there were back here, then you are going to have stagnation in markets. Now, I want to go ahead and talk about another really important way to look at dollar liquidity, and that's dollar liquidity dominance. So you can make this chart if you'd like. It's USDT.D plus USDC.D. Now I understand there are some other stablecoins out there. Unfortunately, adding those into the mix here, it's sometimes difficult. We don't have access to all the dominance metrics, but those those stablecoins are minute compared to the overall amount of dollar liquidity and USDT or Tether and USDC or USD coin. These are the two main stablecoins, and they are the lifeblood of markets, similar to dollars and traditional financial markets. What we see here is that throughout the greater part of 2019 to 2023, we had a continued increase in dominance here, and we would find capitulative lows, both mid-cycle corrections, but also the Celsius and BlockFi bankruptcy lows, the FTX collapse lows. Essentially, we're moving higher and higher over time. And generally, when you would get towards this upper channel, this was the time to really buy into capitulation, either for short-term trades or if we get to these exacerbated ranges here, where stablecoin liquidity dominance was really making up double-digit portions of the market. That essentially allows for a ripe situation. It usually means that valuations have corrected in the market and there's an abundance of dollars in the system. Maybe it hasn't declined as significant as the prices of crypto assets, and it allows for a fruitful opportunity where there's a lot of dollar liquidity on the sidelines, cheap prices, giving you that capitulative buy opportunity, right? And that's what happens both on the short-term time frames here, but also on those longer-term pullbacks. And vice versa, when dollar liquidity is starting to shrink in terms of dominance, meaning the crypto valuations have probably accelerated, outpacing dollar inflows, you get essentially these cycle or range tops. So you can see the June 2019 relief rally top in Bitcoin was there. Here in February 2021, this is really, again, the time where Tesla was buying Bitcoin, all the news cycles, Cash App, MicroStrategy, right? Here in the top of 2021, and then you see here again the mid-cycle flash crash lows going into the summer of 2021, and then the top of the cycle here, right? Overall, it's still moving in that upper channel. We broke that here, and there's a reason for that. The big reason is the ETF dynamic. The ETF allowed people and convinced people to start paying a big premium on crypto asset prices with nowhere near the kind of dollar liquidity acceleration. And that's what allowed for dominance to get back here to about 5%, all the way from those lows at around 16 or 17%. Wow, huge acceleration within a period of really less than, coming up here on less than 2 years. Now, take a look here at where that 5% figure was. When were we here last time? It was in December of 2021, not too far from those November highs. And you remember how euphoric things were, how optimistic people were back then, right? So essentially what this is telling us here is that the market was placing a bet. And it was placing a bet on the ETF inflows, providing the cushion, providing the replacement for the need for stablecoin liquidity. The hundreds of billions of dollars, right? The $100 billion plus acceleration, more than that, is about $135 billion, $120 billion, give or take in that range, that drove that last cycle. And mind you, returns in which, while they were awesome, if you were in the right altcoin at the right time, for Bitcoin were weaker than previous cycles, right? So again, this speaks to that point about dollar liquidity and its relevance. But if we take a look here, we are now trending at the 200 week. And this essentially means that we're at a make or break moment here. Either this is going to start collapsing, which is going to signal here that dollar liquidity as a portion of the market is making it more and more, and that means that crypto valuations are declining. Right? So there's a lot of dollars sitting on the sidelines waiting to strike for a cheaper opportunity. Or we've got a bounce here soon. And I would say, again, the safe way to play it here, I don't want to speak in absolutes, guys. There's a chance of an altcoin cycle. There always is some kind of chance. Nothing is 100% certain in either direction, and we should not be thinking that way. What we should be thinking about is during dull periods like this where there's no trend, we should set standards. If this sets a weekly close below the 200 week, that could very well be a sign to just sit on your hands and wait a while and wait to see if maybe there's a better capitulation buy opportunity, maybe an altcoin cycle or move down the line at a much cheaper valuation range. If we, for example, get below the 200 day, that blue line on the chart, right, so down here at about 6%, that could be your cue that this is going even lower, which means altcoins are going to be moving higher and people are going to be paying a premium. We don't know what the narratives will be. We don't know exactly what's going to be leading, but overall, we'll have time to figure that out here and what plays are showcasing the signs as we start to see those market conditions change. Again, above all here, right now, we are not seeing good signs. We are seeing an increase in stablecoin liquidity. And while that may help towards establishing a bottom at some point, it clearly isn't establishing a bottom now, at least not yet. So we need to see more confirmation of support at that 200-week core. If we snap through to the upside, that is bad news for altcoins. Another thing, just to kind of put things into perspective here, right? And I think this again speaks to like the confidence here in the market. We can see stablecoin liquidity versus other coin dominance. So again, that real juicy metric to really determine the altcoin market as a whole. And what we see here is we're already almost back here, like back to the 2022 range, right? The highest range we had here was back when we were in March 2022, right? Back here, we were seeing a much better, more optimistic ratio here. We really just faded so many of these gains here. So this again is another interesting way to put it. But I want to bring it here kind of to the closing because I know some people say, Nick, you mentioned the ETF though, isn't that the changing dynamic? What about Bitcoin? Well, it's very important to be asking those questions because Bitcoin at the end of the day is the driver for altcoins. You might hear Bitcoin maximalists tell you they hate altcoins, this and that, yada, yada, whatever. But at the end of the day, no matter where you fundamentally feel about altcoins, Bitcoin and altcoins are intertwined. They are in the same exact market. And there is a direct correlation with a Bitcoin acceleration and altcoin valuations justifiably rising higher with them as well, right? So my point here is that we really need Bitcoin acceleration for an altcoin cycle. And that's not me being negative. That's just every single cycle. Anyone who's a seasoned veteran in crypto will tell you that. If Bitcoin doesn't make it to the moon, so to speak, or it isn't accelerating and going to new highs, altcoins are not coming with it. And what do you know here, Bitcoin? I know some people say, oh, we set new all-time highs here at 1.4 trillion. And this is just a range and it's going to spring up here. Maybe that happens. Maybe it happens. And as we've talked about in this channel for a long time, if we get that weekly close above 72K, I might start getting interested. I might start looking for altcoin setups that are outpacing Bitcoin. But right now, you can really paint it any way you want. We are pretty much at the same market capitalization. Not to mention, there's been a little bit of supply increase, so price is probably a little bit lower, as we were in 2021, in March of 2021. For over more than 3.5 years. No acceleration from that point. Now again, if you bought down here, that's great. Happy for you. Happy if you bought altcoins as well at those lows, you made some life-changing returns. But my point here is whether or not now we're in the setup for an altcoin cycle. And that's going to require Bitcoin surging past its prior resistance range, which we really have not been able to do. We came up slightly. We may be making the support. I can hear those arguments, and I say that they're fair ones. But for me, I'm not interested gambling in trying to guess whether or not this is going to be a breakout or a failed breakout that leads to further capitulation. We are far away from where we were back when the ETFs, not that far away really, from where the ETFs opened up, right? And essentially that 200 week is coming up real nicely towards that range. Again, in previous cycles, we wouldn't even fathom, thinking about this. But if you take a look back here in the prior range, last cycle, you did get a test on the 200 week, and along with that, a secondary one here. So it's not out of the question. This is becoming more and more common because whereas in prior cycles there was an accelerated nature to Bitcoin, the market cap doesn't give us all the price history we need. You can see back here we would get 200-week test, and after that it was just off to the moon. It was off to the races. Back here we didn't even have the 200-week because there wasn't enough price action, and we just kept on moving higher and higher and higher. We wouldn't even fathom coming down to some long-term moving average like the 50-week or the 100-week during a bull market, right? So this is why, again, I don't really call this a full-on bull market. I have my skepticism here at the highs. You see very clearly we've got a clear engulfing candle yet again, right? Accelerated move, engulfing candle that knocks out those gains quite quickly and sets new lower lows. Now here, we're seeing the exact same thing again. All the gains for the past couple days that got people so euphoric. Boom, shot down at the 100-day moving average. Not a good look here. This looks like, again, it can just fall off a cliff here down to the 200-week. And what do you think that's going to do to altcoins? Because when Bitcoin accelerates higher, altcoins come with it and usually come at a more higher degree of velocity of acceleration of volatility and essentially price premium that people start paying. What happens when prices go down for Bitcoin? It's even worse for altcoins. Bitcoin right now is far away from its 200-week moving average. Other coins, they're just sitting barely on it. So what happens when Bitcoin breaks down to its 200-week? I know that's a very far out scenario. I know it sounds way too bearish for a lot of people, but I want you to have that as a thought experiment. What if we get even relatively close to the 200-week or have another leg down? What is that going to look like for altcoins? It looks like, to me, at a minimum, it's coming down here to $125 billion. We've already tested this range here back in August 2022, here in August 2024, 2 years later. And the next range I can think of after you break that 200-week, if you don't find support in that pocket, is you're coming down here to $120 billion to $130 billion. And that's going to be more blood, more unnecessary suffering. You don't want to be a part of that. I'm telling you guys, you don't want to be a bag holder. I can tell you the insiders for so many of these projects and teams, whether you're talking about meme coins, whether you're talking about the more fundamentally sounding projects, the VCs, insiders, early stage adopters and holders are offloading while you buy into the silly narratives that they sell you. And there's not enough people telling you that. There's not enough people telling you that. We got to be cautious here, guys. We have to set standards. We want to see price, like it was back here in 2023, accelerating and holding on that 21-day moving average. If we don't have the trend, which is our friend, then we do not go on the journey of trying to speculate in the markets, at least over a long-term circumstance. So that's it for today's video, guys. I rambled on a decent amount here. If you enjoyed this video, consider dropping a like. It's a great way to support the channel. And if you guys like this kind of analysis here, you can always check out the Dash report, which I'll have linked down below in the description. It's our newsletter here on the channel where both Russ and I create a ton of really great content. I do a 20-page monthly report where I essentially go through cryptocurrencies, equities, commodities, and forex markets. We send trade setups out each month, things that we're looking for. And along with that as well, we have market update videos that we send out exclusively on the market, talking about our exposure to the market, what we're watching for in the charts, our mid-month webinar where you guys can ask me questions, the Dash Report discussion group, one of the best ways you can tap into the brightest minds in our community who are also sharing some of their positions and setups that they're watching. A lot of people have been doing really well, doing a scalp trading alongside Russ. And outside of that as well, we've also been building some long-term exposure to plays that are not in the crypto space that we don't talk so much about here on the channel. So again, a big thing is if you guys want to get access to that 360-degree report on all things financial markets, you can do that at the link down below in the description. And it's at a cost that's less than $1 a day. So it's a great way even just to support the content here on this channel. If you're looking to support us and help us keep doing what we're doing, putting out 3 videos a week for free on this channel, as well as all the exclusive content and the Dash Report. So that's it for today's video, everyone. Thank you all so much for watching. Again, if you would consider checking out the dashboard, it'd be a great thing. But even if not, I hope you guys have a fantastic day. Consider dropping a like, and I will see you guys right back here on Monday. Take care, everyone.